Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders? So that is what we do. And the article itself has all of the vagaries usually of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week. So just a few comments for the week of December the 4th, 2023. I want to talk just a bit about the nomenclature and some of the phraseology you will hear at GTC Traders. I want to put, and we want to put, a little bit more of sort of a professional spin on things that you will see at GTC Traders than what you would see from most folks out there. I'll just end it there. However, at the same time, it is for aspiring traders. Okay? So it's sort of professional, not professional. And no, I'm not talking about CME fees or anything like that, and don't get me started on that whole rant. Not that that would in any way apply to us, because there is no proprietary trading that's taking place under the corporate structure of GTC Traders. There's just not, right? I am the senior partner of another private prop firm, but that's, you know, that's another entity altogether, legal entity. But I'm not talking about that. I'm just saying that with GTC Traders, we sort of wanted to give it a little bit more professional spin, but make it for aspiring traders, sort of looking to improve their game, or folks who are new self-directed retail traders, and that sort of thing. So I say that for a very specific reason. I do know that there are pros that watch what we put out here. And just know, if you are one of those professionals, that I will use nomenclature that's not exactly common in the pro side of the house. I'll give you an example. In the weekly note, I always say something like, we're neutral on price, neutral on yield, right? Whenever we're talking about something like treasuries or in STIRs. Or I'll say, we're bullish on price, bearish on yield, right? Why do I say that? Nobody says that in the professional world. Right, and somebody brought this up to me. It's like, oh, I know, but you got to remember, right? There's a lot of aspiring traders out there. You know, if you're talking about the tens, you're talking about buying the tens price, right? So you're bullish on the price. Nobody says bullish on price, you know, bearish on yield. However, as I have said before, GTC Traders is not exactly my first rodeo. I've helped aspiring traders for many, many years, and something I consistently see them get confused by is anything having to do with a yield debt instrument. Something like treasuries, something like STIRs, right? And I honestly, I have this chart here up of IBM, right? IBM's been something I've used for, speaking of nomenclature, let me just take a little brief side tangent here. You will often hear people refer to it, and this is just broad. This is just everywhere. When you go out on the old interwebs, you'll hear dividend investing, right? I don't know of any professional I've ever heard refer to it as dividend investing. I personally, like if I'm talking to a friend and they're in the pro side of the house, I talk about equity income pieces, right? I've got a lot of equity income pieces. IBM is one of those, right? People that remember me from way back in the day know that I've held IBM for And it's not as much for the yield as much as it is for a stabilization piece, and I sort of have a quasi thing going there that I'm not going to get into here, which I already sort of did a little bit. However, I use this as in the portion and segment of my portfolio that has to do with equity income, right? And that's how I refer to it. You know, buying equities for income. But a lot of aspiring traders or new traders, they call it dividend investing, and they have for like years. I mean, I'm talking like 15 years. They've called it dividend investing. I guess you could call it that. But if you're going to speak more on the pro side of the house, you say equity income, right? Income in equities, however you want to refer to that. My point here is, will you sometimes hear me say dividend investing? Heck yeah, absolutely. Well, why? Because I realize that a lot of people who watch this may be aspiring traders, and that's the term they're familiar with. So it's the same thing when you're looking on the weekly note and we get to treasuries and I say, I'm still neutral on price, neutral on yield, or if I'm bullish on price and bearish on yield. Nobody says bullish on price, bearish on yield in the professional world. But people get confused. And as I was saying, the reason why I brought IBM up is I don't really know why that is. Right? You have to explain to people, listen, if the yield is going down, then the price is going, that's confusing, so it's like in reverse. And it's like, well, think about it like something that's a dividend piece, right? If you hold something like PCY, so you hold PCY for equity income, right? Well, very obviously, if it pays sort of a consistent regular dividend each month and the price goes down, then what's happening to the yield? The yield goes up, right? Maybe it's because I've done equity income for just so long that, I don't know, that's just the way I think about it, right? If the price of your stock goes down or your ETF and there's a dividend, well, then the yield is going up. The price that you pay, what you're receiving in dividend payments, the yield on the price that you outlay is obviously going up. And I don't know why, but for some reason in credit instruments, people get very, very confused by that and have for the decades that I've been explaining, sort of what it is that I do. And that's why I phrase it that way, right? So if I was talking about being, just looking at the 10s, right? Looking at something like the 10-year. I guess since this is equities, what would we look at? IEF as a proxy, right? If I was bullish, buying, I'm buying, then it would be on price, right? So I understand that. But I understand that for some reason, the years I've been doing this, people get confused. And like I said, I don't understand why, but they do. So that's why I specify it that way. And if you are one of the pros that follow some of the stuff that I do, that's why you will hear me phrase things at times that's a little unconventional. All right, so I just wanted to say that. Other than that, I got to tell you, on the inflation route, I'm still taking in information. Core was sticky. However, I just look at input costs on many different things, and the price keeps dropping. Still neutral on something like gasoline, but I'm looking at different segments. I'm just noticing the price on the input costs, falling. I will say there are still, and I think where we're going to get some stickiness on the inflation route is, although the supply chain problem that we had a few years ago has cleared up, and I have specified this, I believe, in a podcast, you have other concerns when it comes to supply chains, as a lot of folks are trying to switch over to be more vertically integrated, and that's going to cause supply problems. And then you've got the whole wage price spiral, you've got behavioral inflation, which can become structural. So I don't know. It's like I looked at the swap curves that Discovery Trading Group had put up. I'm looking at a lot of stuff. It's sort of a mixed bag at this point. I see a lot of input costs, falling, but then again, at the same time, I realize that global supply chains are in flux, I guess is the best way to put it. So that's going to cause core, I think, to remain maybe even a little sticky. I don't know. I'm still somewhat evaluating. And so when I look at something like the longer end of the curve, I have said I am neutral here, and I am still neutral, and I still see this as only sort of a rally and a downtrend. if we're looking at price. I haven't placed any bets here because, quite frankly, we need to stop making new highs. You know, would need a little more consolidation, or at least that's what I would be waiting for. I think you could maybe, like I said this last week, and I haven't done it yet because we just keep making new highs. There's a case to be maybe made for selling call premium, or some sort of bet that way, like a higher probability bet. You know, that's a little more safe. If there's money to be made in like the 9 deltas, or, you know, the 8 deltas. So I'm talking a lot higher probability, right? But that's just what I'm thinking at the moment. And that has just been the vagaries of our thoughts this week. And it has only been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.